Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Who better than our next guest? Let's invite our market master, Madhu Kela, who's with us now. Madhu, good morning.
Hi,
Thanks a lot for joining us in our studios.
thank you so much.
And of course, Madhu, you have been a long-term pharma bulls. So I'll talk about overall market as well. But you reckon a fresh round of buying could start here, and the way some of these stocks have rallied off late, you think it's more than just short covering?
Yeah, it's certainly more than short covering in my perspective, because you see the kind of wealth distraction which has happened in this sector. In 2008 we were at 1 lakh crore.
Yes.
Then we went to 10 lakh crores.
Yes.
And that 10 lakh crores became half. And to best of my understanding, none of these companies have ever declared a loss, including companies like Wokhard, which has passed through difficult circumstances. They're still investing so heavily, 13-14% of their sales into R&D. So a lot of these companies have been spending a lot of money in the R&D. So what happened in the pharma sector was a combination of two factors. One, you had a huge FDA issues across all companies, large cap and as well as in mid caps. And also there were a lot of froth which was there in terms of valuation. I think both of them are correcting now. So you have seen the Sun Pharma facility finally being cleared by US FDA. Even Aurobindo last week got a approval for their Unit 4 from US FDA. So I think over the next 4-6 months, what I reckon, a lot of these problems which were circling these companies will be out from a US FDA perspective. And at least, some of these companies are now available at 1.5 times, 1.3 times book value. I have never seen these valuations in the last 25 years. So you have to be selective as to where you are betting. But I am sure there are opportunities here in this sector.
Madhu, hi, good morning. In fact, the US regulator has stepped up its pace over the last 2 years, and I guess that's why it's hard to sort of find stocks. You never know which one would get hit next. But you spoke about Sun Pharma, Aurobindo. What about something like Divi's Labs? I mean, it went through a really rough patch, and then it sort of recovered so much in the last 6-8 months. Do you see any kind of potential there?
Yeah, I think that company has demonstrated clearly, a lot of people in the market were a little skeptical, their data integrity is that I have always maintained, we've been a very long investor there. I personally have investments, so I must clarify that. So I think they have demonstrated at least this is the first time maybe in the world that some company got a US FDA problem, and that to a warning letter and an inspection, and they got it cleared in 7-8 months. So I think that speaks volume about their capability and what the management is all about. So I think they are in a really good phase right now, and you see, I hope they make additional capex because they've always been very careful on committing capex. So last interaction, whenever we had a call, they indicated that they will do a capex, and that will lead to a growth. So that's Divi's is a secular story. You expect 15-20% growth over a longer period of time, and the valuation today, I think that is the premium which is there in that company is clearly demonstrated of the capability of the management.
So, Madhu, a final question on pharma then. If you were building your portfolio now for the next at least 2-3 years, and you're hoping that, you're picking the pharma bottom, A, is this, you think, for the sector, a real bottom in place? And B, which kind of companies should go in the portfolio? Some of the more domestic-facing names like a Cipla, perhaps? Or should you actually look at buying a Sun Pharma, US-facing, cheap valuations, as you mentioned, and maybe, a real turnaround in the making?
So, it's always very, very hard to understand where the bottom is. Only in hindsight do we know that was the bottom. So I would not even try to guess that this is the bottom, but I am sure we are near the bottom. So it's very difficult to pinpoint a point. But if you are constructing a portfolio for 2-3 years, maybe these are interesting times to build that portfolio. That's point number. So what I would say that, even large companies are available at such valuations. So you need to have one large company, you can take your pick, 1 or 2 mid-cap companies, and one company which is off the radar completely today. So that will give you the best possible return, because if the sector works out and if the bottom company works out, it will take care of the return, and the top company will take care of your risk. So I would say that if you have to choose 3-4 names, You have to have
will you
one.
will you be able to give us those
No, of course,
names?
sorry, let's not get that route. Of course, Madhu, we all know that one name that really did well for him at that point, of course, well unknown name was Divi's Labs, and that's where I think the Madhu really got it at a market cap of less than 100 crores and rode it all the way up to a market cap of some 50,000 crores. So, but Madhu, let's talk about the overall market now. We've discussed enough of pharma. What's the sense you're getting this year? Because once again, we are discussing what happens to next election, politics as a factor. This year, we have been the worst performing emerging market. Midcaps are seeing quite a bit of pain after a good 2017. Your thoughts?
So if we break the market, Anuj, broadly in two categories. So let's talk first about the index. I find it very, very hard to emphasize the index falling like more than 10%. And I have done all kinds of permutation, combination, what will lead to fall, how much, what kind of earnings will, because there is significant weightage in the index of stalwarts like HDFC Bank, Kotak Mahindra Bank, you have IT companies which have a huge weightage on the index, and you have a lot of these FMCG companies which are more secular in terms of, so for me to emphasize that the index can fall a lot, that doesn't look like a big probability. Now you will really, really need some big jolt from the world or from India, something which is completely unexpected for the index to fall big time. And that is what has got demonstrated, that we get a jerk, but it doesn't sustain at a lower level because these defensives and the good companies have a lot of weightage on Nifty. So, and the mid cap, let's just come to, obviously, all of us were feeling that there is, not bit, there is a euphoria in the mid cap side, specifically micro companies. I was being told there are some 200 portfolio managers between Churchgate and Borivali now. So, so everyone had got money and everyone was investing that, and obviously a lot of people who are first timers who have not seen market cycles. So what we saw in the last 2-3 weeks, a complete massacre. And we track some of these companies closely. So I was just seeing a list of companies which have lost like more than 40%. There were some 150, 200 names of market cap erosion of between 40 to 80%. So some of it has got corrected. But what I'm saying in the mid cap side, specifically when the large companies are available at attractive valuation, you have to be really sure about two things. A, about the quality of management, and B, about the earning predictability. Because market is completely unforgiving on these two counts. So, they make 1 quarter of miss in earning and the stock price becomes half. So, unless and until you are really seasoned investor and you know what company in which you are investing, what is the predictability of earning, at least for the next 3-4 quarters, 1 or 2 years, at least then only you should bite the bullet.
Okay, so
now here, this is where the opportunities are.
Absolutely. So since you are the seasoned investor amongst all of us sitting here, you tell us, I want to drill it down to some specific ideas and themes, right, for our viewers. One space that we've been talking about in the past is banks, both PSU and private. Now this IBC resolution has begun. There are a lot of hopes here that the banks
so Sonia,
will
just
recover.
before we go into a specific name, I would like to clarify that these are not recommendations.
Yes, of course.
Please consult whoever you have to consult. We are having a frank discussion.
Yes.
It's just my opinion. It's not an invitation to buy any company.
Sure.
The discussion becomes interesting only when we take names. So I'm happy to discuss names, but it's not a recommendation.
Okay, so then let's drill it down. In PSU banks as well, if you look at a name like SBI, in the last 2 years, SBI has not given you any returns. 2 years back it was...
Ma'am, not last 2 years. 8 years SBI has not given you any return. So if you look at from 2008-9 what the price of State Bank of India was, the price is lower than what it was in 2008-9.
So what makes you so bullish now?
So if you drill down, what has happened in public sector banks. First, psychologically, everyone has lost hope that inka kuch ho sakta hai. So you discuss to any seasoned investor, they think that there is still a lot of pain which is ahead. So that gives me a lot of comfort that when you make a real good call in an investment, you have to be in absolute minority. So so today that is the time. Second, so much provisioning has happened in the last few years that once the write back starts, like one Bhushan Steel write back, and is given back banks 35,000 crores. A lot of them had extra provided. So I feel that over the next 1 or 2 quarters, you will have a significant write back on all these banks, because a lot of this money was not bad. This is asset backed. This is, real hard collateral back. So you will have the provisions which were being made, you will have that coming back. There are 2 instances when SBI has come and said that they will do 50,000 crore rupees of recovery in this year. Okay. 2 days back, few days back, I read an article which says that Punjab National Bank aims to recover 20,000 crores in this year. So these are large numbers, I don't think these prices are factoring in that kind of recovery. Having said that, the opportunity, as I said again, doesn't only lie only in public sector banks. You have to be again choosy. You can only buy maximum 1 or 2 ideas from there. Similarly, there are opportunities in private sector banks. There are opportunities in new edge finance companies like fintech companies. Look at what Bajaj Finance has created. 1,30,000 crore rupees of market cap for a company which is literally like 7-8 years old. That speaks what is the kind of potential which lies ahead. And as much as people will like to be skeptical about their valuation and all, the fact of the matter is the stock just doesn't give in.
It doesn't stop.
Even in a bad market, it doesn't fall.
So, a follow-up question, Madhu, on that. I wish I could just simply ask you, what's the next Bajaj Finance? But on NBFCs, because it's a wide universe, housing finance, consumer finance, even some of the rural and SME finance plays. We were just talking to M&M Financial Services yesterday. The companies sound very bullish, but which spectrum, what kind of businesses are you most optimistic on?
That's why again I'm saying it's a portfolio approach. So you buy maybe 1 or 2 public sector banks, you buy 1 or 2 private sector banks, and maybe you buy 1 or 2 NBFC names, because you can't have all your portfolio. But I'm saying on the back of this IBC resolution, and personally, I'm very, very bullish on our new finance minister. I'm a big fan of his. And, he is already shown in the last 2 weeks that, he's already called meetings, he's already in the path of resolution. And the kind of work which he did in the power ministry, the kind of work which he did when he was a coal minister, and again when he came to railway, I think I am very sure that government is also taking a note of these problems, and you will see a significant resolution even coming from the government side.
Okay. By the way, I just want to point out NALCO. Just pull out the intraday chart of NALCO. The stock is making highs of the morning. There's been some bit of global developments on alumina because of Brazil court rejecting the hydro appeal on Alunorte output. So that could be the reason that you're seeing NALCO as a stock making highs of the morning. So just keep an eye on that one. So Madhu, final question from my side then. For retail investors who have seen a great 2017, and we have seen, we've been talking about equity cult, the entire FI selling being absorbed by the domestic and more. What's the advice? Because after great 2017, 2018 has been a year of, being back to the, reverting back to the mean. In that case, how should equity investors approach this market from here on?
It's a brilliant question. I think this year is going to be volatile. So let's not fool ourselves that we are going to have a repeat of what happened in terms of returns in the last 2 years. Making money was really, really easy. You're there in any fund, any stock, you could make money. This year is going to be tough, And there is going to be a lot of news flow and a lot of volatility, both global and local. So there's going to be a lot of politics-related news flow. We are approaching 2019, who comes, who doesn't come. No one knows, but all the forecasts will be made. So that will cause a lot of volatility. You are seeing the liquidity which was infused in the global system for last 7-8 years. That is coming towards an end, if it is not the end. So some kind of a interest rate hardening, some kind of a inflation-related fear coming back in the global markets will also be seen. So within this volatility, when the time comes, that is the time you have to bite the bullet and you have to be prepared. So what I'm saying is that, if you are a retail investor who knows your company, this volatility is your biggest friend, because this is where you get stocks at 30, 40, 50, 60% discount to the real intrinsic value. If you don't know it, then you have to give it to a seasoned fund manager who has seen many cycles and who have a proven track record. So essentially, still I believe that equity if selected properly, can still give the best possible return over the next 2-3 years. But you have to get the companies right. If you're on the wrong side of the company, you have seen what kind of wealth you can lose.
Okay.